Hello, and welcome back to Explain the Charts. Today, September 22nd, 2025, we're conducting an in-depth analysis of Alphabet, ticker symbol Google, focusing on critical news events and their discernible impact on its market performance. The biggest headline recently has been Google's parent company, Alphabet, achieving an astounding milestone by surging past a $3 trillion market capitalization. This monumental achievement, which solidified just about a week ago, places Google firmly within an elite club alongside other dominant tech giants like Apple, Microsoft, and Nvidia, emphatically highlighting its immense and growing market influence. A significant catalyst explicitly driving this impressive surge was the breaking news that Google's advanced Gemini application has successfully taken the coveted #1 free app spot in the US Apple Store, effectively outcompeting established rivals like OpenAI's ChatGPT and Perplexity. This remarkable success of Gemini indicates not only strong investor confidence in Google's rapidly advancing AI capabilities, but also its proven ability to seamlessly integrate these sophisticated technologies into widely adopted core consumer offerings. Looking back to mid-July 2025, reports from finance magnates indicated Google was trading around the $182 mark, with strategic AI hiring at Google DeepMind being a primary driver for market optimism, showcasing a clear long-term commitment to AI dominance. At that specific time, the Relative Strength Index, or RSI, was noted at 64, a level that suggested ample room for further upward movement without the stock immediately entering an overbought state, a prediction that has proven accurate with the subsequent price appreciation. However, the path forward is not entirely free of obstacles. Google is currently experiencing mixed market pressure due to renewed antitrust risks, particularly within its highly profitable digital advertising business. While a federal judge notably ruled in early September that no asset divestitures would be required in one specific antitrust case concerning its internet search business, a second and equally important antitrust case, directly focusing on its digital advertising practices, is scheduled to restart today, September 22nd. This ongoing regulatory scrutiny could very well introduce heightened volatility and represents a critical external factor that all investors must monitor closely as we delve into the technical charts. Furthermore, broader market sentiment data from MarketBeat shows GOOGL's news sentiment currently at 1.14 with a slight downward trend, a notable contrast to the overall computer and technology sector's sentiment of 0.82 with an upward trend, indicating specific investor caution towards Alphabet despite its recent triumphs. Now, let's turn our attention to the daily chart to clearly visualize how these pivotal news events have been profoundly reflected in GOOGL's price action over the past year and a half, spanning from May 2024 to September 2025. Overall, we observe a consistently robust long-term bullish trend, with the stock climbing impressively from approximately $168 in May 2024 to its current elevated levels around $254, demonstrating sustained market enthusiasm. This persistent upward trajectory, characterized by higher highs and higher lows, unequivocally demonstrates the market's enduring confidence in Alphabet's resilient business model and its significant growth prospects, especially in emergent technologies. Zooming in on the most recent and impactful period, a massive and abrupt surge is particularly evident in early September 2025, precisely illustrated by the powerful candles between September 2nd and September 3rd. During this remarkably short window, the price jumped dramatically from around $211.35 to over $230.66, marking a significant and clear breakout from its previous trading range. This initial explosive move correlates almost perfectly with the recently surged narrative accompanying the news of the $3 trillion market cap and Gemini's immediate widespread market success, serving as undeniably powerful bullish catalysts. Following this, the stock continued its strong and determined ascent, breaking through subsequent resistance levels with conviction and ultimately reaching its 52-week and all-time high of $256 by September 19th, unequivocally showcasing its remarkable strength and upward momentum. Let's pinpoint some key support and resistance levels on this daily time frame, which are absolutely crucial for identifying potential trade entry and exit points and understanding market psychology. The $256 mark currently stands as a critical immediate resistance, representing the stock's recent all-time high and a significant psychological barrier where it presently encounters notable selling pressure. Just below the current price, we identify immediate support around $252. This level was a previous high and acted as a key consolidation area in mid-September, underscoring its importance for short-term price stability and a potential rebound point. A stronger and more reliable support zone emerges around $249 to $250, which is both a psychologically significant round number and a level that previously served as a robust floor during brief, healthy pullbacks, suggesting solid underlying demand. Looking further down, the $230 to $232 range, where the stock robustly consolidated after its dramatic early September leap, serves as a crucial long-term support level. A decisive break below this would unequivocally signal a major shift in the underlying bullish trend and could trigger more substantial declines. For the bullish case, a clear and sustained break above the $256 resistance, especially if accompanied by strong accompanying trading volume, could unlock further substantial upside potential, with traders setting their sights on $260 as the next significant psychological target, and then potentially extending towards $270. Conversely, for the bearish case, if selling pressure intensifies, a failure to hold the $252 level could swiftly lead to a retest of the $249 to $250 support zone, signifying a period of profit-taking or increased investor caution, potentially followed by a deeper correction if that level also breaks. Now let's switch to the 1-hour chart to examine the granular, short-term dynamics of this significant early September move and its immediate aftermath, providing crucial insights for intraday traders. Here, we can clearly see the hourly candles vividly illustrating the rapid ascent on September 2nd, commencing around 12 o'clock Universal Time Coordinated, as Google decisively broke out from its prior trading range with considerable force. The price soared impressively from approximately $210 to $229 within a concentrated few hours, a powerful move underscored by noticeably high trading volume, which unequivocally signifies strong institutional and retail conviction behind this sudden upward impulse. This aggressive initial burst of buying can be directly attributed to the overwhelmingly positive news flow, particularly the milestone of the $3 trillion market cap and Gemini app's immediate widespread market success, acting as potent and undeniable bullish catalysts. Following this spectacular initial burst, the stock entered a period of healthy consolidation, trading sideways within a tighter range, roughly between $226 and $232 for several days, indicating a necessary digestion of the rapid gains and a period of natural price discovery. A subsequent, albeit less dramatic, leg-up occurred around September 5th at 1300 hours Universal Time Coordinated, where the price once again surged from approximately $232.60 to nearly $235, demonstrating continued underlying strength and consistently maintaining the overall bullish trajectory observed on the longer daily chart. The sustained buying interest during these moves, even amidst consolidation, is a bullish indicator, suggesting that buyers are stepping in to support the price. Moving to the 15-minute chart, we can gain an even finer perspective on the most recent, intricate trading action leading up to today, September 22nd, capturing the minute-by-minute tug-of-war between buyers and sellers. Between September 17th and 19th, Google exhibited considerable intraday volatility, but crucially, it managed to largely preserve its overall upward bias, demonstrating resilience. On September 17th, after some initial consolidation in the $251 to $252 range, the price experienced a sharp but ultimately temporary dip to $246.64 around 1802 Universal Time Coordinated, only to swiftly recover much of those losses by day's end, indicating strong dip buying interest. September 18th showed more range-bound trading activity, primarily oscillating between $251 and $253, with a brief attempt to break higher to $253.99 that ultimately lacked the sustained buying power to hold firmly. However, the upward momentum truly solidified on September 19th as the stock decisively pushed past the $253 mark and aggressively tested the all-important $256 resistance level, displaying significant bullish resolve. The 15-minute candle at 1932 Universal Time coordinated on September 19th vividly confirms the intraday high of $256, providing clear, time-stamped evidence of the strong bullish sentiment that peaked on that specific trading day. This highly granular view highlights the immediate battle around this critical resistance level, with some noticeable profit-taking evident as the price retreated slightly from its absolute peak, ultimately closing the daily candle around $254.72. Monitoring these short-term reversals and immediate rejections or breakthroughs is crucial for making swift trading decisions. For all traders and investors looking at Google, understanding these critical price levels and their underlying market context is absolutely paramount for informed and strategic decision-making. The short-term outlook is generally cautiously bullish, provided the stock can firmly maintain its position above the $252 immediate support, which has consistently proven resilient in recent trading sessions, indicating a temporary floor. A sustained and convincing break above the $256 resistance, especially if it occurs with significantly higher trading volume, could unlock further substantial upside potential, with traders likely setting their sights on $260 as the next significant psychological target and potentially extending towards $270 thereafter. Conversely, if selling pressure intensifies, perhaps due to negative news from the antitrust trial, a decisive break below $252 would clearly signal increasing bearish pressure and a likely period of deeper correction, potentially leading to a retest of the $249 to $250 zone, or even the $230 to $232 area on a more significant and concerning pullback. The long-term trend for Google remains robustly bullish, fundamentally supported by continuous innovations in AI, consistent growth in Google Cloud services, and a dominant position in online advertising, making any deeper pullbacks potentially attractive buying opportunities for long-term investors looking to accumulate. However, we must reiterate that the digital advertising antitrust trial restarting today presents an immediate, unpredictable, and significant risk factor that could swiftly swing market sentiment in either direction, demanding extreme vigilance from all market participants, especially those involved in short-term trading. This binary event could either solidify bullish sentiment or initiate a significant downward correction, making risk management essential today. To recap this comprehensive, in-depth analysis, let's consolidate the most important price levels and our unbiased predictions for GOOGL's potential future movements. The most critical immediate resistance level to overcome for continued upward momentum is $256, which represents its current all-time high and a strong psychological barrier. Immediate short-term support lies firmly at $252, a key level derived from recent consolidation and previous resistance. A stronger psychological and technical support is strategically found at the $249 to $250 barrier, which has historically shown resilience. Finally, the $230 to $232 zone serves as a particularly significant long-term support. A decisive breach below this level would unequivocally indicate a major shift in the prevailing bullish trend and could signal a more prolonged period of decline. Our unbiased prediction for a sustained break above $256 has a moderate to high likelihood of 60%. This highly probable scenario is strongly reinforced if the ongoing antitrust news proves to be neutral or, even better, positive, and if the broader tech market continues its current upward momentum, ideally accompanied by sustained high buying volume, indicating broad market participation. A consolidation or a modest pullback to the $249 to $250 level carries a moderate likelihood of 50%, as profit-taking after such a strong and rapid run is a natural and often healthy market behavior, allowing the stock to reset before potentially moving higher. The likelihood of a significant, sharp drop below $230 is comparatively low, around 20%, unless there's an unexpectedly severe and negative outcome from the digital advertising antitrust trial or a major, unforeseen market-wide correction that impacts the entire tech sector. For what to look for next, pay extremely close attention to the exact developments and sentiment surrounding the digital advertising antitrust trial, as its outcome could be a singularly powerful determinant of GOOGL's near-term price action and trajectory. Continuously monitor trading volume patterns. Consistently strong volume on upward moves confirms robust buying interest and market conviction, while unusually heavy volume on downward moves signals significant and concerning selling pressure. Additionally, keep a keen eye on any new AI product announcements from Google or notable competitive shifts from its rivals, as these events could provide fresh, powerful catalysts for growth or, conversely, introduce new headwinds for GOOGL's overall market trajectory. Stay informed about broader macroeconomic indicators that might influence the tech sector, such as interest rate expectations or inflation reports. Always remember to thoroughly conduct your own research, formulate your own trading plan, and manage your risk effectively before making any trading or investment decisions. Thank you for joining us for this comprehensive session on Explain the Charts, and we eagerly anticipate seeing you in the next market analysis.